There's only about 1 week left until SoFi reports their Q4 financial results and their full year 2024 wrap up. And in this video, I'm going to be sharing all of my earnings predictions, breaking it all down by segment, and why I think SoFi is going to have a breakout quarter. And by the end of this video, you're going to realize why I've been accumulating so many shares of SoFi because some of these numbers are far and beyond what any Wall Street analyst is predicting for this business. And I'll preface that also by saying that my predictions have historically been one of the closest in terms of what the company ends up actually reporting. So without further ado, let's jump right into it. I'm looking forward to sharing these numbers because I've had them written down in my notes, but I haven't had a chance to really record them because of the traveling. And now that I'm finally back, I really wanted to share why I am so bullish for this earnings and why I've been accumulating so many shares of this company. And if you've seen my earnings predictions in the past, you'll know that they follow a certain format. So without further ado, we'll start off with members. This number was somewhat predetermined for us ahead of time since SoFi released their 10 million member milestone mid-December. They actually put out the press release December 17th, and the numbers are accurate as of December 12th. And we know that Q4 ends at the end of December, so it becomes a simple math equation to find the unknown because we know that they added 627,000 members up until mid-December, and we know that they had 9.37 million up until the end of Q3. So it's really a matter of what additional members did they add since that publication in those last 2 weeks of December. So that would leave them about 19 days until the end of December for them to add that remainder. And we also know that Q3 ended on September 30th, and there's 92 days between the end of Q3 and the end of Q4. So we just divide out 627,000 by 92, which gives us 6,800 members per day. And you multiply that out by 19 days, and you get 129,000 members, which is 756,000 total for Q4. Now, you might be thinking, well, wait a minute. If we extrapolate linearly, that brings us to 756,000 members for the quarter. That's not really 800,000. And I just started playing around with these numbers. And instead of 7,000 members per day, I added 9,000 members per day for the last 19 days. That would result in 171,000 new members, which would put the total member mark at 798,000, basically 800K. So essentially, we know that if SoFi stays into this range of 700, and so essentially, we know that if SoFi stays in this range of 7,000 to 9,000 members per day, their total member count for Q4 would be between 756,000 and 800,000. And my number, I mean, I would love for them to come in at 800,000 and beat that number. But realistically speaking, if I cut that in the middle, I would say around 788,000 would be my prediction for the quarter. It's a slight uptick off the 7,000 members that they're adding per day up to December 12th, but it's also not going crazy and saying that magically they're going to add 9,000 members for the last 19 days of the year. So, of course, you can play around with that number and come up with a prediction somewhere in between those. I mean, you could predict 800,000 if you want to, but it's going to be unlikely and it's going to be a tough lift simply because they have anchored us to this 627,000 number as of December 12th. And so we only really have 19 days to play around with until the end of the quarter. And of course, that also means that we will not be hitting 1 million new members in Q4. That's most likely going to happen in 2025, especially if we look at the trend of acceleration of member growth and we extrapolate that out to 2025. We're definitely going to have a quarter that is a million members plus. But in this quarter, my forecast is 788,000 new members. And I think by assigning 788,000, I am also giving them the benefit of the doubt in assuming a ramp up and a pretty aggressive ramp up at that, because realistically, the number can come in lower than that. Now, the more interesting thing that I really want to talk about in this video is the segment revenue, because in previous videos, I haven't broken out the segments in as much detail as this one. And so I'll just start overall by sharing some thoughts. And then I also broke out the revenue number in terms of individual segments for revenue. So starting off with lending, I think it's fairly topical to start off with this one because just a couple of days ago on Thursday, we got news of the $525 million personal loan securitization with PGIM that closed in Q4. And the reason why I mention that is because it speaks to the strength of their personal loan business and it also helps them grow. In May, there was a similar deal with PGIM for 350 million, and to date they've sold 3.9 billion in personal loans. Now, when we're talking about personal loans, really we're talking about the strength of these loans as well as their ability to originate new loans. And I think in terms of the origination of new loans, I would imagine with the rates dropping and having an impact on this, student loans, home loans are not going to be picking up. There's seasonality aspects to that. Like nobody buys a home in December. They're going to wait until the spring. And then for student loans as well, the rate cuts are not going to be kicking in immediately. And as a result, I think Q3 was a peak in terms of what we're seeing for lending. And this is also seen in their guidance, right? When SoFi talked about their 2024 full year guidance, they talked about what percentage growth they expect for their segments. And then in terms of the lending segment, they said at least 100% of last year. So they're approaching it with a minimum threshold as opposed to a maximum threshold. And to me, that signals that this is not going to be as strong. And of course, we're going to have to also factor in that the Fed is going to continue to lower rates and that personal loans is definitely going to get hit by that. But we're expecting for student loans and home loans to essentially make up that difference in 2025. But this is going to be a really strange transitional quarter for that to happen. Now, financial services. I've said in the past that I believe financial services to be the most interesting segment for SoFi and their growth story in general, because now that we have the loan platform business, I think that's going to be especially true given the impact that we saw from the loan platform business in Q3. And if we just extrapolate that outwards into 2025, I do think that they're going to decide to revise guidance for 2026. And I think the loan platform business is going to be a core reason for that upward revision because that 80% year over year growth rate, I think, is going to be a big, big contributor in them beating their guidance and evolving this perception around their business. And to this point, there's been multiple firesides from Chris Lapointe talking about the demand of the loan platform business. Anthony Noto talked about it. They talked about it in their earnings call last quarter. And this is something that I hope they're going to expand on in this earnings call because this earnings call is the end of the year wrap up. And so they're going to be providing guidance for next year as well. And I really want them to set a strong statement that 1 billion in originations was literally just the start. And the volume for the loan platform business is going to continue to scale because at this point, we can really start to make a dent in the contribution of the loan platform business that it has on financial services in general. And more importantly, on EPS. And just overall, given the strength of financial services in Q3, I expect not only will the revenue and the EPS increase, but it also increase the operating leverage that the business has and the financial services revenue per member overall, which reached a new high in Q3. And I talked about this revenue per member in my last earnings video recap, and I think this number will continue to increase as well as it has over the past several quarters. I think that we can very easily see a world in 2025, maybe by the end of the year, where financial services can be just as big, if not even bigger than what lending is today, as their number one revenue contributing segment. That sounds like a crazy statement today because lending is doing over 100 million more than financial services. But if you really look at the growth rates, financial services is going to catch up and in a big, big way. The tech platform, just before we jump into some of the numbers, I think it remains the big elephant in the room because if we just look back to the guidance that they provided at the beginning of the year, the performance relative to that guidance for the technology platform has been lackluster. And it's really put a damper on this AWS of fintech narrative because management has been reiterating multiple times that they have not lost any major deal and that the pipeline is strong. In fact, Chris Lapointe even reiterated that in the latest fireside chat. And yet we're still to see a big impact of these deals in their actual numbers, whether it's Galileo accounts or whether it's the revenue from that technology platform. And yes, there will probably be some seasonality aspects of tech companies having spend at the end of the year or an unused budget that they want to leverage. And maybe that's going to help out Galileo, or maybe there's proof of concepts that are coming to an end. Or it could go the other way and companies can decide, hey, actually, we want to push our budget to 2025 and it's not going to be reflective in 2024. And I believe Anthony Noto also commented on this in CNBC in October on a fireside chat, where basically he was saying that the Fed decision to cut rates would also be beneficial for the tech platform since companies use that to determine what they want that spend to be. And basically, he was asked about what he expects the rate cut to be. And he was basically saying that, hey, I want it to be more aggressive because companies will leverage this data to make decisions around their spend for 2025, whether they want to be conservative or whether they want to be aggressive in their growth. Now, let's talk about the actual numbers that correspond these thoughts around these three segments. I'll jump into the financials and I'll start off with revenue and then I'll talk about the bottom line as well. In terms of revenue, I expect them to beat their estimates and also report for the first time a quarterly revenue over 700 million. I spent quite a bit of time plugging in different numbers and different scenarios on a spreadsheet in terms of what I expect the actual number for revenue to be. And I found myself, as I was looking at more data, as I went back and I looked at the previous earnings report, I listened to the call again, I looked at the guidance that they had, and I looked at some news releases that we had since Q4. Because just in preparation for these videos, I have all the press releases and all the news just on a Notion document. And so I was going through that, and every single time I would revise my number for revenue upwards. And the number that I finally landed at, 738 million. That's my number for revenue. And I'll also break it down by segment. But when I break it down by segment, it kind of makes more sense than in isolation. And the reason why it sounds crazy is because it's an aggressive target. Because if you look at the company's own guidance that they provided and the analyst expectations, I mean, they're forecasting like 670 million and the EPS number to come in at 3 cents. And I think here in this image, it's laid out nicely for you to see the upside surprise that SoFi has delivered on a consistent basis every single quarter. And we can see that revenue consistently beats. Like in the last quarter, for example, they were expected to do 631 million and they came in at almost 700 million. So they beat by over 65 million. And so you can very clearly see a world where if they just put up the same exact beat and they're expected now to do 670 million, that easily puts them over 700. And if you just look at SoFi's year over year revenue growth rate, you can see that that revenue growth percentage jumps between 20 and 35% year over year, depending on what quarter it is. And if we just put the very most conservative number and we say 20% growth year over year, that puts the revenue number at 738, which is what I'm predicting. Now, of course, you need certain catalysts to achieve this. I get it. And I think, in addition to the strength that we're seeing in financial services and what we've heard from the recent news around the PGIM personal loan securitization, and then generally the loan platform business as a whole, I think there's so much in terms of catalysts that we can pull from to justify an upside surprise for SoFi's revenue. So, yeah, I put down 738 million as my number for revenue. I could even see that being higher, of course. I mean, of course, if they report even 690 or 695 or something like that, that would still be a beat on terms of what they're guiding for and also what analysts are expecting. So even that as a standalone is positive, but I do think they're going to be over 700 million. Now, let me break that down in terms of how it looks by segment. Like I said, I think the lending revenue might be softer than last quarter because of the implications with rates. But that softness in lending, I think, is going to be more than compensated by a strength in financial services. I put the lending segment at 360 million in terms of revenue, which is a very, very slight single digit increase year over year. And that's in line with what we've been seeing for the lending segment. Like lending segment has been increasing single digits all year long. And in their own guidance, they highlighted that they expect to deliver at least 2023 levels of lending. So I don't see this number being lower than 355 million for Q4, but I also don't see it being a knock out of the park, breakout number. And the reason is because just realistically speaking, if you look at what historically SoFi has been putting up for lending numbers, and then you also account the fact that Q4 is not going to be as strong as Q3 was, which was really their strongest quarter for lending. I think that originations are going to be softer. I think that the actual number that they report is not going to be super impressive, but I think it's still going to be an increase in the 2023 levels. So 360 million was the number that I put down for lending. Now, in terms of financial services, by the end of 2025, like I said, I think that can surpass lending. And I think that there's easily a case to be made for that to be a reality that we see this time next year. And in terms of Q4, I mean, they literally gave us the answer in their guidance. They said a minimum of 80% growth from 2023 levels. Well, I mean, like, let's plug in those numbers and you'll get somewhere between 255 to 265 million for financial services revenue. Now, because they put 80% as a lower threshold and the impact that we saw in Q3 for the loan platform business in general, and if we expect that to continue, I'm assuming that 80% is going to be the minimum growth rate for Q4. And in fact, in previous quarters, last quarter as an example, they came in at over 100% growth in financial services year over year. And so if we just assume 90% growth in financial services for this quarter, that'll put us to 265 million for financial services. And so that's my expectation for financial services revenue is 265 because we're just assuming 90% growth from year over year, even though they've had quarters where they put up 100% growth and 80% is their minimum. So even if they do 255, that's still in line with what they're expecting for guidance. But I think 265 is more realistic because of all of these other aspects. And because we saw what a blockbuster quarter Q3 was on the back of the loan platform business. And finally, moving on to the last segment, the tech platform, I put them at 113 million for revenue because the tech platform has been one of the most lackluster growers. And if you just look at the growth rate over the last 4 quarters for the technology platform, it doesn't really move in a big way. And here again, if we just look at the guidance, they're saying low to high teens of 2023 levels. And this guidance was minimum 20% at the beginning of the year. And then they said high teens to 20%. And then they said mid to high teens. And now they're saying low to high teens. And simply by plugging in those numbers, you'll get a range of what you can expect the technology platform Q4 revenue to be. Because in Q4 of last year, they reported 97 million in tech platform revenue, which puts their own guidance range of 107 million to 116 million as like, 10% to 19% of growth year over year. And so if you look at that range, I took the number to be a little bit seasonally stronger and essentially, glass half full type of person. I put 113 million for the technology platform as that would account for about 16 to 16.5 year over year growth rate. And I think that's generous. I think for the technology platform, we could very easily see like 108 or 109, but I put 113 because I think number one, the rate decision went exactly how management wanted it to go. And so there might be more activity in Q4 as a result of that. And then number two, I think that the technology platform has to reaccelerate going into the new year. And I think management is very well aware of that fact. But again, all of these numbers are looking at it from a glass half full perspective. And in that, I think financial services is going to be carrying the revenue estimates to lead us to that 378 million. So to recap, financial services growing at 90%, 265 million, technology platform growing at 16%, 113 million, and then the lending platform growing at single digits, 360 million. You add those up, that brings us to 738 million in terms of revenue. Now, for EPS forecasts, 3 cents I think is super low of what analysts are expecting. And of course, this number is going to be derived from net income, which is derived from adjusted EBITDA, which is derived from, of course, revenue. So I can't go out there and say, hey, I think they're going to do 738 million in revenue and then come back and say they're going to do 2 cents or 3 cents of EPS. That's just silly because these numbers are related together. And so, keeping that in mind, with revenue being where it is, I think EPS is going to come in at 6 cents for SoFi for Q4, which is essentially double what their estimates are. And the reason for that is just because my revenue estimate is higher. So, my EPS is going to be higher because I also think they're going to have a higher adjusted EBITDA margin, right? Like last quarter, they came in at 27% adjusted EBITDA margin, and that's been accelerating from the 23% that we've seen in the past. And I think this number can keep accelerating as the business continues to operate, but also with initiatives like the loan platform business, where they're getting all of this non interest income. Much of that is just going to fall to the bottom line. So I think 6 cents EPS is definitely realistic. I mean, they've had 100% beats on the bottom line in the past. It's going to be aggressive, absolutely aggressive. I think the safer bet is probably to say 5 cents of EPS and 700 million in revenue, but I think 738 million and 6 cents of EPS is something within the realm of possibilities that they have done before. And that would mark a really, really great wrap up to 2024. Now, in terms of the earnings call, I think that's going to be interesting because it's going to be the full year wrap up. And last January, when they did this call, we also got guidance going out as far as 2026. And something that I've been saying for a few months now since the last report is I'm hoping management provides updated, revised guidance numbers for 2026 EPS expectations. And the idea here would be for them to essentially revise those numbers upwards so as to force analysts to account for these updated numbers in their models. Because currently, analysts are not really talking about the 2026 EPS estimates of 55 cents to 80 cents. They're actually modeling for lower than that. And as a result, coming up to a fair value that's lower than what SoFi is currently trading at. And so if management comes out and they raise the entire range of expectations for what they think 2026 EPS is going to be, all the analysts who are doing their models are going to have to account for that. Because this last quarter, if they report 6 cents EPS, that's going to be a massive beat. Because if you just add them up, 6 cents plus 5 cents, that's 11, plus 2 cents, that's 13, plus 1 cent, that's 14 cents of EPS for a full year. That's like double what any Wall Street analyst was expecting for this business. And in fact, it's pretty in line with what retail investor analysts like myself, Tanner, Chris, and others in the SoFi community were expecting. Because at the beginning of this year, we were saying, hey, 12 cents EPS, 13 cents EPS for this business. Meanwhile, Wall Street analysts were saying 6 or 7 cents EPS for this business. And keep in mind that this guidance for 2025 is going to set the tone for all of the upgrades and downgrades from the analyst community that we get in the weeks following, but also as to what we can expect for the business to do in terms of a loan platform business revenue and in general to understand what management's goals are. For example, in 2024, one of their goals that they were tracking was for the non-lending segment revenue to be 50% of the total revenue contribution. And so that was a KPI that we were tracking all throughout the year. And this is going to be the same for 2025. They have an opportunity to set their goals, to set their targets, and to make the community aware of where the business is heading. And since this is the end of the year wrap up, I'll go so far as to say that the guidance is going to be just as important, but even more so important this quarter round, because the fact that SoFi triple beats, that's baked into the sentiment around the stock. If they don't triple beat for whatever reason, their stock is going to come crashing down. But if they do triple beat, that's going to be like the base case. And then the guidance on top of that is going to be what brings this stock price shooting up above $20 a share. Now, something, of course, to keep in mind here is, we've been talking about SoFi for years and years, and we know this business fairly well. And we know that management is going to be conservative in their guidance estimates because being conservative is in their DNA. But even their conservative estimates are higher than Wall Street analysts' expectations for the business. But nonetheless, I do think that they're going to be conservative. And it's going to be depending on the macro environment. It's going to be depending on Fed's ability to telegraph more rate cuts. And they're going to be baking in two rate cuts because that's what the Fed said last month. It's going to be two rate cuts. And so they're not really going to be baking in three rate cuts or more, even though realistically the Fed said, hey, we're going to look at the data and we could open a possibility to have more than two rate cuts for 2025. But the business is not going to bake that into their assumptions. Most likely their assumptions is going to be baking in two rate cuts for what the actual environment is going to be like. So obviously that puts a damper on things, but the flip side of that from a guidance perspective is Anthony Noto in the last earnings call said that 2025 is going to be the best macro environment that the business has had since he joined the company in 2018. He reiterated this in the closing remarks of the Q3 earnings call, and he's talked about it in every single fireside interview and CNBC interview that he's had since. But either way, the guidance is going to be very important. I'm going to be covering the earnings call live, sharing my thoughts in real time, and also doing a recap at the end of the day for what the earnings results were. And that's going to be live on this channel the morning of January 27th for us to all listen to the SoFi earnings call together, along with many others in the SoFi community. I urge you to join that. And also for this video, in the comments below, let me know what you think SoFi is going to be reporting and whether my forecasts are way too bullish, just enough, or not bullish enough for this business. And I've been buying up this stock hand over fist because I think that they have a real potential here to do something amazing. And we'll see if that plays out or if that's going to be biting me in the end. For right now, thank you so much for watching. I will see you in the next one.